It's Friday, May the 22nd, 2026. You're listening to the DX Today AI Daily Brief. Today, a stealth robotics startup pulls in $700 million. Microsoft and a Big Four firm forge a billion-dollar alliance. And the White House hits pause on its most consequential AI order yet. Let's get into it.
Brett Adcock, the founder behind Figure & Archer, has done it again. His new venture, Hark, emerged from stealth on Thursday with a $700 million Series A that values the secretive AI hardware startup at $6 billion. Parkway Venture Capital led the round, joined by Nvidia, AMD Ventures, Intel Capital, Brookfield, Qualcomm Ventures, and Salesforce Ventures. Hark is building what Adcock calls a universal AI interface, a single layer connecting agents, robots, and the digital world. The company has just 70 employees, but already runs a private data center stacked with Nvidia B200 GPUs. Adcock seeded the company with $100 million of his own money last year. Investors are betting he can turn the agentic AI wave into hardware.
From hardware to consulting.
Microsoft and EY unveiled a $1 billion joint investment on Thursday aimed at moving enterprise AI out of pilot purgatory and into governed production. The 5-year alliance pairs Microsoft's forward-deployed engineers with EY's industry consultants to deliver agentic solutions across financial services, manufacturing, life sciences, and the public sector. EY isn't just selling the playbook, it's living it. The firm has rolled Microsoft's Copilot out to 150,000 employees and reports a 15% productivity lift, which it is plowing back into client delivery and training. Both companies say the partnership will accelerate the shift from experimentation to measurable return on investment, a reckoning that has dogged corporate AI budgets for 2 years running.
Now to OpenAI.
OpenAI opened a new revenue front on Thursday, launching a self-serve ads manager built directly inside ChatGPT. Advertisers can now create, target, and optimize campaigns through the same interface users rely on for chat, a move that turns the world's most used AI chatbot into a programmatic marketing surface. The company is reportedly targeting $2.5 billion in advertising revenue this calendar year and $100 billion annually by 2030. Sam Altman's team also rolled out durable cross-platform watermarking through a SynthID partnership with Google, plus a new consumer tool for verifying whether an image was generated by OpenAI. The ads launch sets up a direct collision with Google's search advertising fortress.
Wall Street's biggest bank goes global with AI.
JPMorgan Chase confirmed on Thursday that it is now deploying AI tools across its entire investment banking business worldwide. Paul Urin, the bank's Asia-Pacific head of investment banking, told Reuters JPMorgan was among the first in the sector to adopt the technology at this scale. CEO Jamie Dimon doubled down in a Bloomberg interview, signaling the bank will hire more AI specialists and fewer traditional bankers. The push lands inside a 2026 technology budget of roughly $19.8 billion and a workforce of 2,000 AI-focused staff. JPMorgan is also one of the first firms approved to use Anthropic's powerful Mythos cybersecurity model under a controlled program called Project Glasswing.
To Washington now.
President Trump has hit pause on the executive order that would have required leading AI labs to submit frontier models for a 90-day federal review before public release. The order, expected to be signed this week, was postponed late Wednesday, with the president saying he didn't like certain aspects of the draft. The framework would have established a voluntary agreement involving OpenAI, Anthropic, Microsoft, and Google, with classified red teaming by the National Security Agency. The reversal comes after Anthropic's release of Mythos, a model capable of spotting decades-old security vulnerabilities, rattled administration officials. Trump is still expected to sign a narrower cybersecurity directive that would expand information-sharing programs to include AI companies, a softer first step toward federal oversight.
Anthropic took its show on the road.
Anthropic wrapped its two-day Code with Claude developer conference in London on Thursday, using the European stage to unveil a wave of platform upgrades. The headline was Claude for Small Business, a packaged deployment that brings Claude natively into QuickBooks, PayPal, HubSpot, Canva, DocuSign, Google Workspace, and Microsoft 365. The Claude developer platform added fast mode for Opus 4.7, plus self-hosted sandboxes and MCP tunnels that let enterprises keep sensitive code and data inside their own infrastructure. Anthropic also confirmed a Tokyo edition for June 5th and 6th. The London stop drew thousands of developers and underscored the company's pivot from research lab to full-stack enterprise platform, competing head-on with OpenAI and Google.
Security gets its unicorn.
Software supply chain security startup Socket crossed the unicorn threshold on Thursday, closing a $60 million Series B at a $1 billion valuation. The company says the new capital will fund its firewall, certified patches, browser protection extensions, and an expanded product roadmap. Socket's pitch resonates with a market grappling with the consequences of AI-generated code. As autonomous coding agents and open-source dependencies pour into enterprise repositories, the attack surface has widened dramatically. Customers include Figma, Vercel, and OpenAI itself. The funding marks one of the year's clearest signals that defensive AI security spending is on the rise even as offensive AI capabilities mature inside frontier labs. Investors see a long runway for code provenance and dependency vetting.
Now to the high seas.
Quartermaster, a maritime AI startup based in San Diego, raised $43 million on Thursday for SmartMast, a sensor and analytics platform that gives commercial ships real-time intelligence well beyond what the legacy AIS transponder standard can offer. SmartMast combines radar, optical imagery, and acoustic data, fused with proprietary AI models that detect collisions, smuggling activity, and crew safety incidents. Quartermaster says the system is already deployed across hundreds of vessels and has assisted with multiple at-sea rescues this year. The round positions the company to push into defense and Coast Guard contracts. As autonomous shipping moves from pilot to deployment, sensor fusion startups are emerging as the connective tissue tying older fleets to a more automated maritime future.
On to chips and earnings.
Nvidia delivered another blockbuster quarter, reporting record first-quarter revenue of $81.6 billion on Wednesday, up 85% year-on-year. Net income hit $58.3 billion, blowing past the $42.9 billion analyst consensus. Data center revenue alone reached $75.2 billion, nearly doubling from a year ago. CEO Jensen Huang told investors current quarter revenue should land near $91 billion, a forecast that topped Wall Street estimates. The board authorized an additional $80 billion in buybacks and lifted the quarterly dividend 25-fold to 25 cents. Despite the beat, the stock dipped on cautious supply commentary. Even so, the AI infrastructure boom remains the most lucrative trend in modern markets.
From chips to compute deals.
SpaceX's confidential S-1 filing, which surfaced on Wednesday ahead of a potential record-breaking IPO under the ticker SPCX, contained a stunner. Buried in the prospectus is a $45 billion three-year compute lease in which Anthropic agrees to pay SpaceX $1.25 billion every month through May 2029. Anthropic gains full access to the 300-megawatt Colossus 1 data center in Memphis, adding more than 220,000 Nvidia GPUs to its inference fleet. The filing also disclosed a $60 billion option for SpaceX to acquire coding startup Cursor. Elon Musk called the Anthropic agreement proof SpaceX can sell AI compute as a service at scale, an unexpected pivot for a rocket company.
And to the workforce shift.
Standard Chartered confirmed plans this week to cut nearly 8,000 jobs by 2030 as the British bank reroutes spending into AI and automation across its global operations. CEO Bill Winters told staff the bank will phase out routine processing roles in favor of agentic tools that handle compliance, onboarding, and transaction monitoring. The move follows similar restructuring at Coinbase and Cloudflare earlier this month, and JPMorgan's own pivot toward fewer traditional bankers. Industry trackers now estimate more than 113,000 tech and finance workers have lost jobs in 2026, with nearly half explicitly tied to AI-driven workflow consolidation. Critics warn the trend is part AI, part cost-cutting cover. Workers and unions are pushing for clearer transparency on automation-related severance.
And to professional services.
KPMG and Anthropic deepened their alliance this week, announcing that Claude will be embedded across KPMG's digital gateway platform for all 276,000 of the firm's global employees. The rollout adds private equity-focused Claude agents that summarize deal documents, surface portfolio risks, and automate due diligence workflows. KPMG estimates the deployment will free up millions of hours annually across audit, tax, and advisory practices. It also marks one of the largest single-enterprise Claude deployments to date. For Anthropic, the deal is a major proof point that frontier model adoption is no longer limited to tech firms.
That's your briefing for Friday, May the 22nd, 2026. For DX Today, stay curious.